Hello, good afternoon. You have tuned into Close Trades right here on ET Now. I'm Shrishti Sharma and with me Shel D'Souza. And taking a look at the markets, they also seem to be like in a bit of a Friday move. But because we have actually given up all those morning gains, but for the past half an hour or so, if you see, then the markets are not that volatile. But yes, of course, as of now, we are in that red territory when it comes to Nifty 50. We are down almost 28 odd points, while Nifty Bank as well, now touching and retesting that level of 55,000 with a cuts of 42 odd points. But a lot of movers indeed in today's trading session. There's a stock, Adani Ports, which has been holding its top position when it comes to Nifty 50 gainer since the start of the day. The auto stocks are holding up a bit, but Bajaj Finances are also another counter, which is almost at the day's highest point right now and have been seen on that gaining streak since the start of the day. Other than that, what's not doing well is, of course, JSW Steel on the back of the news flow, Bajaj Auto, Hero MotoCorp, Eicher Motors. These are the top laggards in the Nifty 50. But yeah, Cheryl, not a great day for the markets indeed, but we shouldn't complain much given the run-up that we have already seen.
Yes, absolutely, Shrishti. I don't know whether we can complain much or no, given the fact that we are by nature greedy, isn't it, when it comes to the markets and the returns. Everyone wants to make more of it. And given the fact that we've seen the respite in the market after a while, and the fact that you have the FIs also coming back into the markets, I think that's one of the reasons why everyone's hoping for this sort of a sugar rally or sugar rush to actually continue. For the markets, as you can see right now, we are once again drifting lower. A crucial order coming in from the Supreme Court, and that supposedly is weighing actually on the sentiment of the market. If you actually track the time that the markets actually saw that sharp downtick, is the fact that when you saw the Supreme Court order coming in, especially when it comes to the liquidation of Bhushan Steel and Power, they have rejected JSW Steel's resolution plan. And post that, you saw a sharp slide in JSW Steel, not just JSW Steel. Take a look at the PSU banking index and what is doing at this point in time, given the fact that the PSU banks are the ones that will be hit hard, and the hardest will be PNB Bank. So let's take a look at what Punjab National Bank is doing at this point in time, because the exposure to Bhushan Steel and Power was pretty huge for PNB, and there you go. See, as you can see it on your screen, it's at the day's lowest point, actually erasing all of his gain. In a short while from now, we will actually tell you what does this mean, not only just for the company, for the entire process, as well as the PSU banks in depth and in detail. But for now, let's bring on board our guest for today. We have Jitendra Goyal, who is the Director of Global Investment Management at Credit Suisse Wealth Management India, as well as along with Jitendra, we also have Kunal. Very good afternoon to both of you. And Jitendra, let me come to you and get your sense in the markets, given the fact that, yes, we've been seeing this sort of an up move, and it is thankfully being led somewhere by the FIs as well. Do you think now we can say conclusively that the FIs are back in India?
Hi, and thank you for inviting me on your show. See, first of all, the macro improvement in India is pretty stark, and I think looking at the GST numbers, the way rupee has behaved, also the interest rates in India is falling. RBI is infusing liquidity. So from a macro stability perspective, I think we are in a much better position compared to our peers, and I think that gives some kind of respite to FPIs who was looking at somewhere earnings downgrade, and more or less the earning downgrades have now started to priced in when we were expecting somewhere Nifty growth of 12 to 15%. Now the consensus is expecting somewhere around 9 to 11% kind of a number. So net, I think large part of earning correction is now factored in the numbers, and also the macro stability is helping some sentiment, improvement for FPIs. On the other hand, look at the global factors as well. If you see the de-escalation of the tariff tension, now this is going to be very crucial. How China and US negotiates. But over the past few weeks, we have seen that US has taken a U-turn in terms of putting tariffs on all the countries, and that has led to some kind of sentiment boost. And hence, I think we can't say it's like a FBI will turn extremely positive on India, but at least the selling has abated. And month to date, the FPI flows are also flat to a little bit positive. So I would say it's a great sign, but to see a sustained FPI buying, I think we need to wait a bit until the time we see good recovery in earnings starts to happen.
All right. Hi, good afternoon, Jitendra. This is Shrishi also joining in. Great to be speaking with you. But since you are just highlighting the fact that you believe that the selling should stop for a bit, the selling has actually got absorbed. And given the fact that for the earnings that we have seen so far, there hasn't been a big disappointment coming in. Well, of course, there was a disappointment from the IT majors, but on the back of the valuations, the stock were not that hammered. The selling was already done. Give us some sense that what's been your reading in the earnings so far and which were the outliers.
So I think looking at IT sector, I think yes, you are right. We have seen correction happening there, and already market was pricing in. And post the results, we have seen kind of a mixed reaction to IT. I think valuation perspective also the sector has seen good downgrades, and large part of the fear that look we are going to see US recession or a major slowdown in the developed economy. I think that's why you are seeing the correction in a large part of the IT names. So largely the large caps, I think, looking now attractive. So we have started recommending a few IT names now from a 12 to 18 months perspective. Remember, they are not completely out of the woods. So I think there we see some kind of buying support happening as large part of the negative earnings have started to priced in. Looking at banking sector, I think still there is good headroom. RBI has already infused more than 5 lakh crore of liquidity year to date. So there also, I think the results were a little bit mixed. You have seen some correction happening in the NBFC sectors and some of the private banks as well. And I think there you get good buying opportunity if it corrects another 2 to 3%. So I think as a banking sector as a whole, we remain positive, and we think that earnings recovery is on cards in the banking stocks, given liquidity support and the kind of macro improvement. So net, I think these are the two outlier sectors where we think there could be outsized opportunities to buy. Otherwise, I think consumption is little weak. We have seen some of the retail names reporting, not that exciting numbers. And till the time consumption, broad-based consumption recovery happens, I don't see earnings will pick up in this sector. So avoid, I think, consumption-driven names. I think IT, to some extent, it's a value might emerge over the next few months or so. And banking and financials is looking pretty strong. And barring, let's say, some other sectors such as defense, there we see a lot of traction happening because whatever happening globally as well, in government is also now going to focus more on building their defense, capabilities. Order inflows have started. So I think, we are seeing very divergent performance across the sectors, and we need to be cognizant about these all developments happening on the macro front.
All right, Jitendra, but just taking that point forward related to consumption and the spending patterns, help us with your take on the auto counters, because globally, what we are getting to hear from all these global OEMs that they are looking forward to some uncertain times. They do believe that tariff uncertainty could impact the numbers, and they are just lowering their profit guidance and the sales guidance in the times ahead. Do you believe that this could actually trickle into some of the sentiment could actually hit the Indian OEMs as well, given the fact that we have just seen the April auto sales data and they don't look that exciting?
Exactly. So we do not recommend to go for globally exposed auto components companies or to some extent one or two OEMs who are linked to global auto cycle as well. So we are staying away from it. Domestic auto names, there also the valuation is not cheap. So in our model portfolio, in our recommendations, we hardly have any auto sector as auto stocks at this point of time. If you look at even the guidance for FY26, there also we see muted, commentary uh, uh, from the companies. However, some of the auto financiers probably could do well. I think because NBFCs we prefer and we think that is the sector where your lending rates are capped and your borrowing may fall once the interest rate starts to fall further. So net, I think we are a little bit more positive on auto financiers and auto focused, banks compared to OEMs as of now.
Right, so that's your take, especially on the auto OEMs. And I like how, Jitendra, in every answer of yours, banks is made a good feature, prominent feature, even the NBFCs. But then, given the fact that we've already seen such a rapid rise, especially in the banking space, be it in any segment of the banking space, what about the other segment when you talk about the entire financial space? Financialization is a big theme that everyone has been playing, especially when you talk about financialization. You also have the insurance theme that plays, you have the capital market plays as well that comes into all of this. How are you looking at this? And also certain platform companies also that actually benefit with what exactly is happening around them. So are you looking at those segments, or is your pick when you talk about banks and financials is only limited to banks and the NBFCs, which may be having exposure to the auto sector as well?
I think intermediaries were looking at companies into demat space or dematerialization of securities, and those kind of platform companies we definitely like. But insurance, we are a little bit cautious here. We think that still there is some headroom for valuations to correct. So from overall banking and financial perspective, if I look at our top preference remains for private banks, followed by PSU banks and NBFCs, and to some extent intermediaries in the financial space. But not looking very aggressively on insurance space. There we think competition is going to be increasing going ahead. So I think heightened competition will lead to margin compression there. So we are not very bullish on insurance. It's just like a neutralish kind of a view there.
On that note, thank you so much, Jitendra, for joining us. And also, apologies, is a faux pas from my end. Jitendra Goel is the Chief Investment Strategist at Kotak Alternate Asset Managers. So apologies for that, Jitendra. And thank you so much for joining us today on ET Now.
My pleasure. Thank you.
Well, as you can see for the markets, yes, we are around those flat line when you talk of the benchmark indices. And remember, that's exactly what we were indicating, or the GIFT Nifty was indicating for the markets. But there is a big Supreme Court order that has weighed on JSW Steel. And after the break, we'll talk more on that. So don't go anywhere. Welcome back. You're watching Closing Trades right here on ET Now. Flat moves coming in for the markets at this point in time, but there's one stock that is seeing huge moves in trade today, and that has to be JSW Steel. It is down in excess of about 6% in trade. This after Supreme Court directed liquidation of Bhushan Steel, Power and Steel. Remember, this was one of the companies that JSW bagged in the IBC process. My colleague Ankur is here to tell us the significance of this particular order coming in from Supreme Court, what it means for JSW Steel, what does it mean for the PSU banks who actually recovered part of their money that they had lent to Bhushan Steel on back of this, and also what does it mean for the entire IBC process. A lot of questions for you, Ankur, to help us decode this entire saga right now.
Yes, we are back to square one if you talk about the resolution process of Bhushan Power and Steel, because the apex court has turned down the acquisition which was done by JSW Steel. Now what the apex court is saying, it is saying that why JSW has used mix of equity as well as OCDs, meaning optionally convertible debentures, and why not only equities, and also there has been delay in timelines. Now in their reply, JSW Steel mentioned that the actual order has not reached to them. They will study it, and they will also appeal in the highest court regarding this implication. But for now, it is the first case where the resolution was implemented, in fact way back in 2021, and after 4 years now Supreme Court is saying that actually COC should not have accepted this kind of resolution plan, and now this is null and void, and more importantly there will be liquidation which will be done for the company.
Right, the fact that this sort of a move coming in actually, Ankur, it's very big, right? Because it's just not JSW Steel that is going to be impacted by this. It's also going to be PSU banks, isn't it, Ankur?
Yes, definitely, especially JSW Steel, because you would understand that this case went from NCLT to NCLAT. Then many back and forth, there were 4 bidders who were serious about it, and finally JSW got it for 19,700 crore. And even if you take the base price, leaving SR Steel, this was one of the biggest buys which you call about dirty dozens, which were approved by Reserve Bank of India. And now after 4 years of implementation of actual order, Supreme Court is saying that the acquisition was illegal, and not only to the buyer but also to lenders. Questions have been raised. COC has been questioned. Why did you accept such kind of resolution plan?
Absolutely. A lot of questions are going to be raised on back of this Supreme Court order. Thank you so much for that, Ankur. We also have Nikunj joining us in the studios. Nikunj, this is a very big case. Given the fact why it's big is the implication that it will get, right? It may just open Pandora's box, given the fact that you have now Supreme Court talking about this entire Bhushan Steel and Power and the fact that the liquidation process now.
See, there can be a twist in the tail, so to speak, which is that they can always go and appeal and then they can get a stay on it. So
that's exactly what JSW is saying. We'll review it.
So if it reviews it, if there's a legal stay into it, if the court says status quo and then we will have another, hearing, then nothing frankly changes. But if it is something which now becomes the new law, then what happens? This becomes the precedence for the entire IBC. This becomes the entire precedence for the liquidation process, the entire process. What was the whole idea of this entire IBC? IBC in a sense was constituted because there were bad assets, or there were errant promoters who in a sense did not do the right practices, and on purpose they had really taken money from the banks, and then in a sense they had really done some kind of sideline deals. That really was the spirit in which some of these liquidation processes were done, which is they were approved by court, they were approved by IBC, and they were approved by all the legal processes. So if this liquidation process comes under pressure or under question, it changes everything. And then this could have serious implications. But my point is that let's talk about it once we know that this is the end of the road. Today, I think the action and the reaction is more sentiment, because this is a news which has come more like a bolt out of the blue. Nobody was anticipating this court case. It's only when they came out, market started reacting to it. So I think it's in my book, with my limited understanding of where it stands versus where it could go. This may really not move beyond a certain point, and I think the stay is coming. If it does not come through, then we will understand it. Then we will have to understand how the entire liquidation process would be reversed, because that is again a very complicated process. At what was the right pricing, what was the right asset, the assets have multiplied over the years, what happens to banks if the liquidation process starts. You talked about PSU banks. So if JSW, worst case scenario, if they have to liquidate the assets, the money will go back to banks, right? Because JSW paid to the banks, and when they acquired the asset, in this case, if you acquired something, if you sell, you will have to still pay to the banks, because banks in this case, they become the original owner. So the ownership has to be transferred. When the ownership has to be transferred, and then the liquidation process will start, then court has to approve it, then it's a process, then there would be an auction. And whatever proceeds will come through, they will go back to the banks, because banks are the original owners, because JSW will have no ownership rights. And the level at which these deals were done, when the liquidation process was done, it almost happened before COVID, right? That time the real estate and the land and the stock market valuations and the JSW group, everything was so strikingly different that in this entire liquidation process, banks actually would end up making more money rather than what they actually got in the first liquidation process. So I'm trying to build scenarios here. I don't know which scenario would be at play, but logically and sensibly, they will go to the court, maybe get a, and then you go to take it from there.
Yes, exactly, because given the fact that this is a huge sort of a move coming in, it will actually shake the foundation of the entire IBC as well, right? Given the fact that you will also have the NCLT, NCLAT that will be in question, the fact that the resolution process went through. Exactly. So in that
ownership
way,
will have to be transferred back, then auction will start, JSW will have to sell, then courts would come in. It's not easy, these are things which happen because of court. Why is the stock reacting? Because it's come more like a bolt out of the blue. It's not a binary event. Nobody anticipated it. It's just that when it came in media, everyone said, "Ye kya ho gaya?" So I think.
Does it warrant like a 6% decline?
See, markets in the short term are governed by several factors, and one of them is sentiment. And the sentiment in steel right now has not been particularly bullish. Why? Because the steel prices have been low and tariffs war are at play, and steel in general is going through a tough time, so to speak. So for a weak sector, when there is bad news, the impact always would be magnified. That's how markets actually would move. Look at Zomato. I don't think the numbers are that great, but the stock reaction is positive because it's a strong stock and everybody thinks that tomorrow will be better than today and growth will come back. So the stock reaction is just not there. Another stock reaction, think about it, IndusInd Bank. So much of bad news came in, but markets expect that, okay, the new management, whenever they would come in, they would be better than the previous management. The stock after the news has actually gone up. So it depends on the positioning of the stock sector. 6% I think is lower if they have to do the liquidation process.
Right.
They will be much higher.
Yes, absolutely. And just a reminder for our viewers, given the fact that you had Ankur talk about the dirty dozen who were in this IBC case, some of them were Electro Steel Steels, Bhushan Steel, Monet Ispat, SR Steel, Bhushan Power and Steel. Also, you had Diwan Housing Finance, which is now actually taken over by Piramal as well as Shrey Infra. So these are some of the counters who are companies rather that were admitted under IBC, and that's how the resolution process took place. JSW Steel was the one that bagged Bhushan Power and Steel, and today that Supreme Court order is something that you need to watch out for. Like Nikunj was mentioning, the fact that most likely that this would be reviewed, and also there would be a further challenge to this sort of an order coming in from Supreme Court. JSW Steel has definitely said that they're reviewing it. So let's wait and watch out for how this actually transpires. For now, it looks like a knee-jerk reaction, but Kunal, on the charts, JSW Steel for you.
Well, of course, after such kind of a price action, the near-term prospects for the stock would get dampened. But we look at JSW Steel more as a levels, more from a levels perspective, and I think in that sense we would look out for 1060, which is the recent high for JSW Steel, as a major breakout point. Until the time the stock doesn't break past about those levels, you might probably expect that based on the news flow surrounding the stock price, it could be a lot more volatile.
All right, so that's the take coming in on JSW Steel. The stock is indeed volatile, almost a 6% cut is what we are seeing. But Kunal, give us some sense on some of the other metal counters as well, because just at the start of the day, I saw stocks like Hindalco and Tata Steel. They were actually up in the trade. Almost a 3 to 4% gain is what the stocks witnessed just at the start.
Yeah, in fact, for the overall metal counters as such, I think I would probably expect that there should be a more follow-through up move, because what you're seeing right now is JSPL making a comeback. Hindalco, Tata Steel, they are on the verge of breaking past about their previous major swing highs. In fact, the best part about the charts for these stocks is that stocks like Tata Steel are now trying to close the gap which has been created on their charts almost like a month back for these stocks, when they had fallen sharply, almost like a 20% correction. So that could be, I think, a big trigger for many of the metal counters going forward. So I think devoid of the news flow surrounding one of the stocks from the metal pack, JSW Steel, when you look at the entire pack, Hindalco, JSPL, Tata Steel, etc., there seems to be more consensus breakout.
All right, so that is coming in on Tata Steel and the other metal counters. We also have Arpit Beriwal joining us on the show. A very good afternoon to you, Arpit. We did speak at length about metals, but there are other commodity-oriented sectors that everyone is watching out for very closely, and that would be the ones that are linked to the crude oil prices. How are you looking at this sector altogether, the ones that are actually either benefited positively or negatively from this one? And do you think it's the time to look at them?
If we talk about overall the commodity sector wise, so very good momentum we have seen in selective due to beneficial of crude oil, mainly good momentum is seen in selective tire stocks and OMCs. So if you look at the chart setup of all the tire stocks, we have seen very sharp recovery from the lower levels. And particularly if we talk about the chart structure of Apollo tires. So if we look at the setup wise, Apollo tires has seen good recovery from the lower levels. On the weekly and the monthly scale, it has given a range breakout. And as crude is favoring us, so definitely from here on also we can see good momentum towards 500, 515 levels positionally in Apollo tires. Apart from the second would be from the OMC pack. OMCs are holding well. And if you look at the chart structure of IOC, so after a long time, it has given a range breakout on the weekly scale above 138, 139 levels, strong bullish candle on the monthly and the weekly scale. And risk reward is quite favorable. So slowly, steadily, the move can be seen towards 147, 149 levels. So I think OMCs and tire stocks will be quite good setup wise, and definitely they can see good momentum going forward.
Right, so tires as well as OMC is the space to be, and definitely it was the auto major and the tire major CEAT which actually changed the sentiment of the overall sector, with the gross margin expansion this time around, a surprise coming in there, as well as the commentary, especially on the export outlook, where the management is sticking on to their double-digit growth guidance. That stock actually was up 8% on Wednesday. With this, viewers, let's move on and let's also get you some of the trading ideas from both of our experts. And Kunal, you go first. Tell us which are your closing trade picks.
So I'll go with large cap name Reliance Industries, a stock which has managed to withstand massively over the last 3 to 4 days, where the markets have become a lot more choppy. So expecting the stock to continue to move up higher and show signs of strength. Would look out for higher targets of at least another 3 to 4% over the very short-term side for Reliance Industries. So that's a buy.
A buy call coming in for Reliance Industries from Kunal. What about you, Arpit?
So looking at the overall, heavyweights are holding well and banking has been quite the flavor. So we'll go with the private bank, that is ICICI Bank. So looking at the chart setup of ICICI Bank, it is holding very strong. Monthly and the weekly setup is quite strong. From past 6 to 7 days, it is consolidating. But the good part is that it is trading in life high territory. So on the verge of the range breakout. So slowly, steadily, we can see good momentum towards 1480, 1500 plus level. So ICICI Bank will be a preferred pick with stop loss 1395 for an upside move towards 1500 plus levels.
Those are the closing trade ideas coming in from both of our experts, Reliance Industries and ICICI Bank. With that, we'll slip into a break on this edition of Closing Trades. When we come back, we'll track the last half hour of this week's trading session. Don't go anywhere.
Welcome back to Closing Trades right here on ET Now. And now let's put the spotlight on the glittering gains that we have seen in gold that seems to be fading as prices take a breather. Now, prices of yellow metal have in fact declined over 2% in the week gone by, and that's the steepest fall since late February. Now, is this a sign that bears may be taking charge in the asset class? Let's go across to Kunal Bothra, who is here to put the moves into perspective. Kunal.
Thank you so much for that, Srishti. So I think we should be ready for that bright yellow gold to now become a little bit more light yellow gold, looking at the way the charts are panning out. So the charts for gold, where we looked at the last, 4 to 5, attempts where the RSI for the gold prices have hit back into those zones where it was extremely overbought. So this is the gold prices on the dollar terms. This is the RSI indicator. Now, very interestingly, multiple times whenever gold has actually made a top, and top is just a medium term time frame, is where the RSIs had hit zones which is closer to this resistance trend line. So as you can see, so it started off first in 2006-07 where gold prices actually topped out over here. You saw the initial zone of resistance coming out from the indicator. That led to almost like a 1 year of sideways or a negative trend for gold prices, where it plateaued out and the asset class remained more in a range. Then a similar thing happened in 2008 where gold prices topped out. This was a point where gold, from here on fell into almost like a 1.5 year of correction. This correction was almost like a 30 to 40% correction on gold prices. Same happened in 2020 where gold prices start to go into a corrective phase, and that resulted into the asset class getting into almost 11 to 12 months of consolidation. The most interesting part is that recently when we hit 3,500 mark on gold dollar prices, we've hit that zone of extreme overbought on the indicators, which means that we are looking at a potential of the next 12 months of consolidation on the gold prices. So there should be a case where we may expect that the gold prices could drop down at least another 10 to 15% further from the recent swing highs at least.
Right, Kunal, very interesting one. And like you mentioned, the fact that from the bright gold color, it may become light gold color. I don't think most of us would be complaining on that, given the fact that hopefully if the prices go down below that 90,000 for 10 gram mark, or maybe much below that, we'll all be happy, isn't it, Kunal?
Yes, of course. On one side, it could be very, very positive. But the spooky part about the charts for prices and it topping out, it happened in 2020 start, it happened in 2008 start. Whenever gold prices have actually topped out, it's actually not augured very well for the equities also for the entire calendar year.
I'm not sure now what should I be praying for it to for it to top out, or how should we brace ourselves for this? But nevertheless, what the charts are indicating right now is what Kunal has explained to us. The gold is pulling back from its highs, and we are seeing in the weekly performance as well. It is the worst week coming in about 2 months for gold. But in fact, we spoke to a lot of experts as well who gave their views on gold, though they maintain that over the longer term, gold looks pretty nice and bright and shiny, but maybe the near term is where the concern lies. So here are what these experts have to say.
I think gold could have a big correction at any time, but I think gold will be higher in a year's time. I would advise people with long positions in gold to continue to hold and just take profits at the margin. Obviously, if you own gold on leverage, you should take some profits, but gold's trading very well.
So what we were trying to say with the gold long was that, you know, bad behavior has its consequences, and people start to lose faith, especially in the currencies that central banks and governments are printing, paper money. So it was time to be much, much more aligned with the old-fashioned currency, the one that doesn't get printed out of existence, and that's gold.
I own gold and silver, and I bought more silver recently. You know, silver's still depressed. Those are two of the few. Well, I'm not buying gold because it's making highs. I hope I never sell my gold. I hope that my children own my gold someday. I am not selling my gold, even though it's making all-time highs.
Gold is extremely expensive in any metric. You know, of course, you guys all putting out this charts that, you know, Nifty has, of course, underperformed gold for last couple of 2 decades at least. So very, very expensive for a zero infinite bond. You know, it's very expensive. From an allocation point of view, you know, it's time to be sort of super concerned about gold valuations now. So I don't think it's a time to dial up gold in any meaningful fashion.
Gold is up almost 50% in the last 1 year despite the correction that we are seeing. You can't have an asset class keep going up, you know, one way. I'm a big bull on gold, but I'm saying that it's gone up too fast, too soon. So there will be some correction, but over a period of time, I'm still bullish on gold, that this is an asset class which will do well, but it can't go up 50% every year.
All right, so that's the experts. Those were the experts speaking on gold. But let's take it forward with Mr. Sunil Subramaniam as well. Hi, good afternoon, Mr. Subramaniam, and thank you so much for your time. Kunal made a very interesting link, or rather interesting observation around that whenever the gold prices actually top out, it hasn't turned that great for the equity markets as well. Do you concur with this particular view, and what's your overall take with the kind of asset allocation that we have? Is it the time to make some changes there?
See, historically, gold had a negative correlation to equities, right? Because there's a negative correlation. So I think that's when we saw these things happening. But what's changed in the dynamic for gold? I know I heard what Kunal was saying in terms of technical charts, but I'm not a technical person. For me, fundamentally, why gold is moving is de-dollarization, right? It's the big nations of the world who are holding dollar securities. Japan is holding the $1 trillion of dollar debt. China has 770 billion. They are trying to reduce their risk with the US. A, because of the tariff wars. B, because they probably see a dollar in decline. So from that point of view, they are buying gold more. So I think one of the things is that going to stop, especially considering the fact that thanks to Trump's pressure, it doesn't look like a BRICS counter currency to the dollar is going to come up. India has clearly distanced itself from any kind of BRICS currency. So in that context, right, gold will continue to be an alternative for sovereign. India itself, the RBI has been among the higher purchases of gold this year in terms of their allocation. That's number one. Number two is the likelihood that America, in a bid to control its fiscal deficit, there are rumors that they might revalue their gold reserves. Now, if that happens, right, then again, that could be a trigger. So I'm saying there are too many uncertainties. I'm not an expert on gold, but to me, the best way is that I keep a 10 to 15% allocation to gold at all times. And I think that's the best way to play, because it's not got a value there to say that it's expensive. It's just gone up. It's costly, but it's not expensive. So how do you say what is the right price for gold? Absolutely no earnings to make that call. So it's an alternative asset. And I think I read somewhere that gold is the new reserve currency. It's replacing the dollar. So if that is the case, then these values of 90,000 rupees or whatever said, they have no meaning at all. It's like the sensex valuation. If you take out 12% compounding of the sensex, today's 80,000 in 18 years will be 6,40,000. Now, will you say the sensex at 6 lakh is too expensive? No, it's a natural part of the nominal GDP growth of the world getting reflected in stock prices, and gold is an alternative asset class. So I think it's very hard to call the tops and bottoms in my view. And so have a steady 10 to 12 allocation to gold is what my philosophy has been. And I think that should work well for everybody, because then you won't feel unduly happy or unduly sad when gold goes up.
Right, Sunil, your point taken when you talk about the fact about gold and the fact that there were talks about it becoming a reserve currency. I don't know how we all feel about it. No doubt if the gold prices go lower, the household income also will go lower, given the fact that a lot of them are looking at that gold in the lockers and feeling happy about it, that wow, when did we even think it will go anywhere close to a lakh rupee mark. But let me come to you, Arpit, and let me get your take not on gold, but I want get your take on some of these gold loan financiers. How are they looking to you on the chart, the likes of Muthoot Finance, Manappuram Finance, or as well as IIFL?
So first, I'll be talking about the overall chart structure of Muthoot Finance, and if you've seen, it has been a huge outperformer in last almost 6 to 8 months. We have seen a vertical one-way rally from 1500 to almost 2400, and from last couple of weeks, some cool-off has been seen in especially gold-related finance counters. So overall, look at the chart setup-wise, the trend of the stock is still positive. However, some cool-off has been seen from the high levels. So I think chart setup-wise within this space, Muthoot Finance stands to be very strong. 2050 would be a major support zone where the stock can retrace to, and that would be a good area to again to add on to. On the upside, 2250, 2350 would be the upside hurdle levels. Apart from that, if we look at the chart of Manappuram Finance, over the chart setup wise, we have seen good rally from lower levels, and now the chart is more or less consolidating. So the base of the stock is shifted higher towards 220 levels. Slowly, steadily, the stock can head towards 240 to 45. So overall, our sense is that a bias would be positive with a slowly, steadily up move towards new high life rate territory.
All right, so that's the day coming in on some of the gold financiers companies. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. As we come right back, we'll count down to the market close. Stay tuned.
Welcome back. You're watching Closing Trades right here on Nifty now. If you look at the markets, yes, we are trading flat with a negative bias when we talk about the Nifty. But let's put a spotlight on some of the world indices and what they're doing, especially in the futures market, that is the US markets, and how they're performing at this point in time. You have the US markets, the futures actually holding on to the positive territory, 0.5% gain now coming in for Dow, ditto coming in for S&P 500. You have Nasdaq also holding on to the positive territory. Remember that you'll have to wait and watch and see exactly how Nasdaq also performs today, given the fact that you have Amazon, Apple that came out with dismal set of numbers, or at least the commentary from the managements were not that enthusing. So on back of that, we'll have to watch out how the US markets actually open up for trade. For now, 0.5% uptick coming in, and also the fact that China has said that they are evaluating scenarios in order to talk to United States on the trade deal. So on back of that, just watch out for those developments. As of now, if you look at the European markets, how they've opened up, very strong gains coming in for DAX, 1.5% uptick for DAX. You have FTSE 100 up about 0.8%, CAC is up about 1.5% or so. So the globe is in a very fine footing at this point in time. Back home, yes, we're seeing muted set of trade, but nothing to complain about. But let's talk about SBI, because they are all set to report their quarterly earnings, and that will be tomorrow. That's a Saturday. Gaurav is here to tell us what the street is penciling in when you talk about SBI. Gaurav, take it away.
Well, yes. The biggest bank of India is likely to report good set of number when it comes to advances and deposit growth, because now the street is penciling in around 13% growth in terms of advances and 10% growth in terms of deposits on a year-on-year basis. As a result, when we talk about net interest income, we may see an uptick of around 3%. This quarter, we may see a softness in the other income side, and that is the reason why when we talk about PPOP, we may see a decline of around 8% on a year-on-year basis. Now, asset quality is likely to stay normal. In fact, we may see a little bit of normalization in terms of credit cost, and as a result, when we talk about profitability, we may see a decline somewhere in the range of 14% on a year-on-year basis in terms of profitability. But overall, the asset quality is likely to remain very normal for the bank. When we talk about the commentary going ahead, any kind of commentary in terms of advances and deposit growth is something to be watched out for. Let's also not forget that bank has said that they will be considering or discussing about equity fundraise, and that is the reason why any kind kind of commentary on that front is something which is really important in this quarter. And lastly, when we talk about net interest margins, although in Q4 we are not expecting any changes in net interest margins, but any kind of commentary on that front is also something to be watching out for. But definitely a decent set of number is what we are expecting from SBI in this quarter.
Thank you so much, Gaurav, for that. But not just SBI, all eyes will be on Kotak Mahindra Bank as well. And Gaurav, take us through what is the street penciling in here?
Well, yes. When it comes to Kotak Mahindra Bank, we have seen the trajectory of strong growth in terms of advances, and it is likely to remain in fourth quarter as well. There are two factors which will support this. First is that now RBI has lifted embargo on credit card segment and also on onboarding the new customers via online channels. And second is that bank has now acquired portfolio of Standard Chartered Bank. As a result, when we talk about the asset and advances, we are likely to see an increase of around 15%, while deposits may also increase somewhere in the range of 12% on a year-on-year basis. When we talk about net interest income, we are expected to see around 7% growth in net interest income, and as a result PPOP may also grow somewhere in the range of 3%. Now here also we are not expecting any kind of changes in asset quality. In fact, we may see credit cost normalization and stabilization on a quarter-on-quarter basis, and as a result when we talk about profitability on a sequential basis, we may see an uptick somewhere in the range of 10% in terms of profit. When we talk about any kind of commentary on FY26, now that is going to be something to be watched out for, because recently the embargo has been lifted. So how the bank is planning to increase their unsecured exposure is something to be watched out for. What is the commentary on net interest margin is also going to be something very important, because in this quarter Street is expecting 4 basis point of moderation in net interest margins, but they are biased more towards the positive uptick and positive surprise that we may see. But definitely in terms of commentary, it is a key thing to watch out for. But all in all, good set of number is what they're expecting from Kotak Mahindra Bank in this quarter.
All right, thank you so much for that, Gaurav, for putting into context what we're going to expect from SBI as well as Kotak Mahindra Bank when they report their numbers. Another number that's flashing on the bottom of the screen is Jindal SAW, where you have the revenue that's come in lower by about 7% on a year-on-year basis. The EBITDA is also lower. And that's the reaction that you're seeing actually on the stock price as well on back of its earnings. A nosedive is what is taken 1.5%, in excess of 1.5% downtick. The margins also have seen a substantial contraction on a year-on-year basis. Kunal, let me come to you and let me get your views on some of these banks we are waiting for earnings. And case in point being SBI, case in point being Kotak Mahindra Bank, they'll be coming out with their numbers. If you look at Axis, HDFC Bank, ICICI Bank, they're all done. How is Kotak Mahindra Bank looking to you on the charts right now?
Yeah, so I think Kotak is one of the strongest names from the entire private sector banking name and the banking pack as such, large cap names specifically, because that stock had shown signs of relative outperformance right from the start of this calendar year, as well as from the September 2024 highs, where at a point many of the banking stocks, they were down 10, 15, 20% as well, in terms of price performance. So Kotak Bank has been one of the stronger name. The stock was one of the first ones to break past about that first major zone of resistance around the 1900, 1930 levels. And then now it's cruising past about the 2200 mark or just closer to that 2200 levels. I believe that this is a very strong sign as well as an indicator that the stock has not just emerged from a 3-year, 5-year-old consolidation, but I believe that the signs of leadership coming back into Kotak Bank is an indicator that we are looking at a major revival for the stock in the long term. So would look out for more upside on the stock in the medium to long term. And traders who are holding on to the long positions, I think they can continue to do that with maybe a trailing stop loss around the 2040, 2050 mark for Kotak Bank.
All right, so that's the take coming in on Kotak Mahindra Bank. But Sunil, till date that we have the numbers coming in from all these private banking majors from the likes of ICICI and Axis, there hasn't been big disappointment coming in till date. And look at the move in the stock price. Many of these counters are at their all-time high levels. But now that we have SBI numbers too, give us some sense that which amongst the SBI and which amongst the private and the public banking names would you like to go with, and why so?
So I would still back the private sector, barring a few large public sector, which should be okay. But the broader back the private sector. And the reason for that is very simply that from a rates perspective, right, any rate cut from there, right, I think that these banks will be sharp enough to gain market share in the retail space. As you know, public sector banks are largely stronger on a corporate lending and MSME lending. But in terms of the retail space, I think private sector banks have far better turnaround times, efficiency of operations and reach, number one. Number two is the fact that the 100,000 crores of the tax giveaway, right? When it comes in the system, it's either going to get saved or spent. And in spent, it's going to be in auto, housing loans, and basically consumer loans. And there again, I think the private sector banks are at a better position to grab the market share. The third is that these 100,000 crores, some of it will go into savings and investments. And all of these banks have very good distribution networks, both for insurance and for mutual funds. So I think they will get a good share of the fee-based income from these kind of sales of those kind of products. So to that extent, I think that in the immediate scenario, right, it's the consumption growth back of this 1 lakh crore and some savings and investment coming through. I think private sector banks are positioned, they're more nimble to grab it. And I think more than just the earnings, I think the asset quality levels are also showing up well for the private sector bank.
Right.
Wait and see.
Point taken, actually, Sunil. But on that note, thank you so much for joining us on the show. Thank you so much, Kunal, as well as Arpit, for being a part of the show and taking us through the market trends and what you need to watch out for. But let's take a look at the markets where we are shutting shop for in today's trading session. Given the fact it's coming as a flat close for the markets, some of the stocks to watch out for, the sectors to watch out for would definitely be the auto sector, because it is gaining for 7th consecutive month, or rather is the longest weekly win in at least 7 months coming in for the auto sector. You also have Godrej Acrowet that is on track for the biggest one-day percentage gain ever after its Q4 earnings. You have Indus Towers that's seen a drop after its Q4 earnings as well. And if you look at Equitas Small Finance Bank, that's another counter also to watch out for. Auto sector in particular, Hero MotoCorp, Bajaj Auto, they are the one in the negative territory on back of their auto sales number. They came in below estimates and they are being punished for that as well. Zomato, very interestingly, poor set of numbers coming in for Zomato, but yes, the brokerages have given a thumbs up to Zomato, and that's one of the reasons why Eternal is closing the day with 1% up move. You have also Ashok Leyland that's all drop after its April total sales. JSW Steel, the big order coming in from Supreme Court, actually impacting the sentiment when you talk about JSW Steel. This is with regards to the Bhushan Steel liquid IBC proceedings, where they have ordered for the liquidation. They've basically said that it is null and void, the entire IBC process for Bhushan Power and Steel, and that's the reason why you have JSW Steel down about 6%. On the other hand, take a look at SBI, Kotak Mahindra Bank. These two counters will be in focus because they will be coming out with their earnings over the weekend. You'll also have Mahindra & Mahindra also that will be coming out with their earnings soon. So on back of that, watch out for Mahindra & Mahindra as well. For now, if you look at the markets, we are shutting shop above the 24,300 mark provisionally. For the Nifty, sensex is trading flat and Nifty Bank ending with a negative bias. With that, we come to the end of this week's trading session right here on ET Now. See you next week and have a great and a safe weekend, everyone.